Hi everyone, today we'll talk about the free UK stocks to buy, February 2021 edition, and this is where I talk about the free UK stocks I'm looking to buy in the month of February. Now this video series I do is the most popular video series on my channel, and the last month's video was the most viewed video ever on this channel, so thank you so much for that. Also, the like button got absolutely destroyed. I think we got over 400 likes, so that was pretty impressive. I think I asked you guys for like 300, so that was an absolute smash. So let's try and make it maybe a little bit difficult. Should we say 500 likes? So hey, I'll give you guys that challenge. We'll see if we can do it. But yeah, today we're going to look at the free UK stocks I'm looking to buy. There's probably two that I'm looking like, yeah, I'm probably going to buy these. And then the third place slot is going to get split between a few stocks this month, because there's a few that I'm kind of looking at and thinking they're quite attractive, but they're just not exactly at the valuation that I want yet. So yeah, I'm kind of splitting that third place this month between a few stocks. But yeah, we'll get stuck onto these companies. If you could, smash the like button. If you do want to know when I'm buying and selling companies, join my Patreon. There's a link in the description. I always post when I'm exactly buying and selling these companies through there. And if you do want to start buying some UK stocks, there's a link to a free trade account and a trading 212 account. You join through there, you also get a free share. But we'll take a look at these three companies. Like I say, they're not exactly companies that are I think are massive opportunities right here, but they are the stocks that I'm most looking to nibble at. I'm probably going to use the month of February as a little bit more of a cash builder month, but these are some probably what I think are the best opportunities right now. So we'll take a look. So I'm going to put this small camera in this video, hopefully makes it a little bit more interesting rather than the normal free stocks I buy where I just kind of put screenshots on. Hopefully that's okay. But yeah, we're going to start with number one. So number one is S4 Capital. So this is definitely my favorite company going into the month of February. I think this is probably the best opportunity out there. So S4 Capital is a marketing company. It has some very big major clients that you will know of and will have heard of. And this is a 2.6 billion market cap company. And the crazy thing about this is when I start showing you the revenue, this company is only about 2 to 3 years old. So to get to the market cap and the revenue that I'll show you in a second that this company has achieved is a credit to the management team and how successful they've been and the clients that they've got. Also, through the last month of January, they have been making more acquisitions. So with the more acquisitions, they can do this because of the amazing balance sheet they have and also how quick they're already making profit and the great profit margins they have. That's also going to help revenue increase faster and faster. So you guys that have been here for months, you know about this company. I've talked about this company multiple times, but that's another positive news that's going on in the background. But hey, from the actual company's point of view, we know this is a fantastic company. I've covered it more in detail than what I'm going to do just right now, but yeah, it's definitely my number one priority going into the month of February. So like I say, it's been on an incredible run. It's kind of taken a break over the last month. The share price has gone up crazy, and I don't blame it for taking a break, but I still think it's got plenty more upside from here. And this is a growth company. This company is going to be growing absolutely huge. But the crazy thing is when we go on Simply Wall Street, a site that's not very kind normally to growth stocks, even they've got it slightly undervalued. And I think that realistically, when I do buy this company, I hope to see this go to about a £10 company at least in the next 2 years. So yeah, it's not too bad from that point of view. On the revenue and earnings side of it, the company's growing absolutely huge. So the revenue increase is going to be great. I mean, it's forecast that it's going to do, well, this year 350, or last year 2020, 358 million, and that's going to jump up to 525 million in 2021, and another big 30% revenue jump in 2022. On the profit side as well, it's going to be growing at a decent rate. The profit's going to be growing about 50% every year. So with that, the P is just going to drop. So yeah, from a profit point of view and from a revenue point of view, it's pretty healthy. And for a growth company in the UK side of it, which we don't have many of, it's a pretty decent valuation. I know that Team 17 is another company, a bit of a growth company that's been talked about a lot on the UK front, but like the P ratio on that is really high, but in this one you're getting a really great growth company with fantastic growth, a lot better valuation in my opinion. And then when we go on to balance sheet wise, it's very healthy on the balance sheet wise. It's got 14% debt to equity, which is pretty healthy. It's on the cash side, it's got 85 million, it's got 77 million in debt. So well covered on the cash to debt ratio, and on the debt to equity ratio, it's really healthy covered there. So like I say, I think this is definitely a solid buy for me. I think that I will see this for holding my portfolio for a few years, And as long as this company carries on flatlining how it is doing right now, it's a company that I'll just keep buying more and more shares of as we go on. So number 2 is Wizz Air. So this is a budget airline that kind of does short haul flights, medium haul flights, and it's a bit more of a company that's well known in Europe and also the Middle East. So this had a drop last week because of news that the UK might tighten its border control, which I think was a very overreaction on the share price. It had a big massive drop. I bought my first couple of shares about a week ago and it has had a 10% jump. So I'm kind of looking at this now that I hope it pulls back and I can carry on building this position. If it doesn't, I think I'll still hold it for a nice, short-term 50% gain. But I'm kind of hoping it does pull back a little bit more, which could easily happen while we have a lot more of these restrictions and everything that's going on, in the world right now. So I think there's, if some more negative news comes out, it's quite easy for this stock to push down because of it being an airline. But yeah, I mean, on the share price front, it had a big, massive drop. It's currently a 3.7 billion market cap company. It's another company that, very much like Jet2, and I'm a big fan of Jet2, that this company has, rather than a lot of companies that are struggling because they didn't have much cash going into COVID, these guys had a lot of cash. And because of that, they've been able to capitalize in COVID by, getting more routes, setting more destinations up. And that's really going to benefit it when it comes out of COVID. And that's what I'm kind of looking out for. I'm looking for companies that are in a good position. They've kind of used this opportunity to capitalize on other companies that have done pretty badly. So that really stood out, that they are still developing the company from that point of view. Now, when we look at the revenue front, the revenue on Wizz Air is previously to COVID growing at a nice rate. Coming out of COVID, it's going to grow at a nice rate. And also, it was doing decent amounts of profit before COVID. And when it comes out of COVID as well, once again, the profit is going to grow at a decent rate. So everything on there is what I would be looking for in a company. Balance sheet wise, once again, like I said, going into the situation, it was in a pretty healthy position. We had 1.4 billion in cash. On the debt side, 357 million. Now, obviously, that will change quite a bit because of what's going on and they will burn through the cash. But still, saying that, it had 3 times the cash to debt, which is very attractive. And I know that they're a very safe company where they probably won't have to raise that much cash going forward. So, yeah, I think it's a very good airline, managed very well, was doing well pre everything that went on in the world, and after everything that's gone on in the world, I think it'll also do quite well from that point of view. So I did pick up some shares in here, and it's one that if it does drop a little bit more, I can start carrying on building into my position. So I'll go on to number 3, and I'm going to give some honourable mentions for a few of these companies. So first of all, I'm going to say Hotel Chocolat. That was pretty close to making the list if it goes a little bit cheaper. Rightmove was very close to making the list. I also discovered a company literally an hour before making this video, so it could have potentially made this list, but I just haven't had time to do enough research into it, so it just got found a little bit too late, which was called Frontier Developments, which basically makes games. So that was another company very close to making the list. But really number 3, so those are honourable mentions for number 3, but number 3 was split between 2 companies. So the 2 companies that I'm going to cover on number 3 were Card Factory. And I kind of thought about, I've got plenty of videos about this one, but basically Card Factory, at the moment, because it's free stocks to buy, I was like, it's kind of got to a point now where it's time to sit back and see how it goes for Card Factory, because they issued a warning the other day that they're going to have to try and find some more capital. And this is kind of make or break time now for Card Factory. Card Factory is definitely the highest risk stock that I've got in my portfolio right now, so it's just on a knife edge, and I think, in my opinion, this Card Factory will be able to raise more money and see itself through the next few months and then be okay. The problem with Card Factory is that, unfortunately, the UK government has totally not worked in their favour. Their busiest times through the year is November and December, and realistically, November we had a lockdown, so they had no sales through there, and then because of the lockdown not done properly and pretty much everything was open in November, then they had to introduce a new tier system, and then that affected them right at the peak time in December. So Card Factory has been stung by some faults that weren't really their own. And that hasn't helped it, and now we're in another lockdown because the other lockdowns haven't been done really well, and it's just a mess for Card Factory. Like the so many different lockdowns that we've had, it's said on its earnings report, you know, Card Factory's been shut like 40% of the year so far, and realistically not many companies will survive that unless you have a really good balance sheet. And unfortunately, going into this, Card Factory didn't have an amazing balance sheet, but from a Card Factory's point of view, they didn't realise that they were going to be shut this much, and that's the tricky situation. But nevertheless, I'm not going to focus on that too much because it's been and gone now. You know, it's out of Card Factory's hands, and it's maybe a situation that wasn't as easy to predict as how it has come out. But Card Factory, obviously, the balance sheet was the problem. You know, there wasn't too much cash. There's a lot of debt on there. There's a lot of people that need the money being paid, and if Card Factory doesn't have money coming in, can it pay them the money they owed? And that's the big situation we have now. Let's just take it from this point of view, right? Card Factory needs to raise money. Now, at the moment, if Card Factory went bust, realistically, you know, they haven't got that many assets to sell, and them creditors probably won't get a lot of their money back. And that's a little bit of a problem from their point of view. So they don't want Card Factory to go bust. And as well as that, from Card Factory's point of view, like, if this company had a better balance sheet, it would have seen itself through it. And with a lot of other companies that have gone bankrupt over this situation that we're currently in, the difference with Card Factory is that Card Factory has always been a profitable company. Granted, the profit has shrunk slightly over the last few years, and that's due to not great management, which we're starting to see a bit of a refreshing. But this company's always been profitable. And let's just go in a year's time and let's just say everything's back to normal. Is Card Factory going to be a profitable company again? Yes. So from the bank's point of view, like, should we make this company go bankrupt? Should all these people lose their jobs? Or shall we just give them an extra couple of million, which then Card Factory will get back to profit, and Card Factory will be able to pay them back. And they also get the money, the 200 million or whatever it is that's currently loaned out at the moment. Then the banks get that money back. If they want the money, then it's just going to send them into administration. They'll go bankrupt, and then the bank loses out. So it makes sense from a bank's point of view, and even any sort of lenders. From a lender's point of view, is like, you look at a company here and you're like, if it wasn't for this situation, it won't go bankrupt because the company was making profit and it will go back to profit. And it just makes sense, you know, when you look at a company like this, you're lending a profitable company, you know. Granted that the last kind of few months have been horrible for it, but if it wasn't for this situation, and when we look at the future, it's not a struggling company, you know. It could have been managed a bit better, 100%, but it was a profitable company. And that's a big thing, you know. Banks are going to be looking at this company and going, what's the risk of us not getting the loan paid back? Well, there's not much risk because it's a profitable company and they'll come out and make profit. So I think that's the big thing now. It's a knife edge, and like I say, for me as an investor now, I've always played this as a turnaround play, and now it's the make or break time. You know, the next kind of 3-4 months will be critical, and if they don't get the loan, then they are going to go bankrupt, and that's why it's always been my riskiest play. I've never been wanting to make it a bigger position. I've never been buying this one too heavy because I've kind of like bought it and then see how it plays out, and I think that we'll make it through it. But there is risk with it, and if it doesn't get that loan, unfortunately, you know, it will go. The share price will go down to zero. At the same time, you put it in the scenario that if Card Factory do get a loan that sees them for the next 6 months, and that brings them up to June time, and they come back to being a profitable company, and Card Factory make it out the other side, the share price is like so cheap. It's 36p. If Card Factory makes it out on the other side and does, which I think someone will give them the loan, then we're going to be talking about Card Factory easily above a £1 stock in a year's time. So this would be a 300% return, and if it carries on turning around its plan, its online growth it has, which has been very successful, Card Factory is going to be a company that is going to go 5x in the next 2 years, and that's the risk to reward, and that's why I'm playing it, because there's a chance that this goes to zero, but if it doesn't go to zero, this is a company that's going to at least 3x in the next year, and that's the little thing there. So yeah, I kind of was thinking about putting this in free stocks to buy because I thought, I know some people probably want to hear my opinion on it and if it's a good time to go buy it, and I think it's still a time to buy it, but I'm like, personally, I'm not buying it, but yeah, I thought I'd leave that one there. It's a very high risk play, but I think there's big rewards if it does work out for this company. So yeah, we've got a lot of joint places, and then I thought I'd mention Card Factory, and the next joint place in third place is JD Sports. So JD Sports has had a little bit of a slump in share price recently. The company is looking to raise more money, and to raise more money, it's going to look to buy out more companies. Now, this company's been buying out so many companies right now, you wouldn't actually believe the amount of brands that JD Sports actually owns. They own so many, and they've been buying a lot more companies in the US as well to help the US growth. So that's what I like about JD Sports. It's not happy with just being a shop in the UK. You know, it's going into gyms, it's looking at EU growth, it's looking at US growth, and it's also raising a lot of cash to really take some struggling companies that have really, because they're not done quite well, maybe they're managed not well, because the balance sheets are not well. It's been looking at the moment to try and find opportunities where it can capitalize on buying some struggling companies, and then it can turn it around, because it's obviously a very well managed company and it can do that. And that's a great thing. You're looking for them sort of companies that are showing them really great signs in this situation, which is JD Sports. Now, if you look at JD Sports revenue growth, you can see how successful this company has been, and as well as that, how attractive this company is going forward. On the revenue growth side of it, on the profit side of growth of it, it's a company that's going to be doing fantastic over the next kind of couple of years. And as well as that, the balance sheet's really healthy. Like I say, it's not raising money because it's struggling, it's raising money so it can go buy out a few things. And when you look at the balance sheet side of it as well, the debt to equity is 23%. It's not too bad. 313 million in debt. On the cash side, 1.1 billion. So, cash to debt, it's nearly 4 times what it's got. It's got 3 or 4 times cash to debt, which is absolutely fantastic. So, yeah, it's not one that I'm buying just yet, but if it carries on going lower, it's one that I'll potentially buy. So, yeah. Like I say, third place is definitely split between a few stocks, with Frontier Developments, Hotel Chocolat, Jet2 as well, and obviously JD Sports, Card Factory. There's a few companies I could put in here, so I just thought I'll mention them all in this sort of list, and hopefully you find a good list of companies to look into. But yeah, kind of want to split that free stocks between a few companies that I'm kind of like watching, but haven't exactly committed to just buying yet. But hey, hopefully you find it a little bit useful. And if you could, smash the like button. If you are new, make sure to subscribe. That'd be absolutely amazing. And I'll see you next video.